Have you ever wondered what drives the global economic landscape and how a country's financial health is assessed? The answer lies in the intricate workings of credit rating agencies. These agencies are the hidden powerhouses that evaluate the economic stability of countries and corporations alike. They are the financial oracles that predict the creditworthiness of these entities, shaping the global economy in the process. In a recent update, Fitch raises India's medium-term growth forecast to 6.2%, downgrades China. Before we dive in details, please subscribe to the channel and stay always one step ahead to know all global important events happening around you. Give a thumbs up and share the video with your family and friends. Let's move on with the video. Fitch Ratings has raised India's medium-term potential growth estimate while reducing China's, according to a recent special report. India's estimate has been increased by 70 basis points to 6.2%, while China's has been lowered to 4.6% from 5.3%. Fitch attributes the higher growth forecast for India to a swift recovery in labor force participation rates following significant declines in 2020. India, with its booming manufacturing sector and burgeoning IT industry, has been deemed a rising economic star. On the other hand, China, once the undisputed titan of growth, has seen a downgrade in its financial forecast. On the other hand, China's reduction is due to a weaker outlook for the employment rate and decreased expectations for capital deepening in the next 5 years. The reduction is mainly due to a large reduction of 0.7 pp to the estimate of China's supply-side growth potential, Fitch said. The report also includes estimates for other emerging markets, with reductions in growth forecasts for Russia, Korea, and South Africa. However, Fitch notes that the estimates for India and Mexico have been upgraded due to factors like a better outlook for the capital-to-labor ratio. When considering the potential growth for emerging markets as a whole, EM10, including China, Fitch now estimates an average GDP-weighted potential growth of 4.0%, down from the previous estimate of 4.3%. If China is excluded from the calculation, the GDP-weighted average potential growth for the EM9 is 3.2%, an increase from the previous estimate of 3.0%. The report highlights that despite these adjustments, the latest estimates for the EM10 remain below pre-pandemic potential growth projections. This is attributed to deteriorating demographic trends and the lingering disruptions caused by the pandemic. Incorporating structural shocks and adjustments to future growth projections, the estimated potential GDP for the EM10 nations by 2027 is projected to be 3.0 percentage points below the trajectory implied by extending pre-pandemic potential growth estimates from 2019. It wasn't just the manufacturing sector that was buzzing. India's business landscape was blossoming too. Fueled by a vibrant entrepreneurial spirit, businesses in various sectors were springing up and thriving, contributing to a robust and diverse economic ecosystem. These were not isolated incidents, but part of a broader narrative of economic resilience and growth. Each of these developments played a crucial role in shaping the perception of India's economy on the global stage. As the credit rating agency observed these trends, it was clear that India's economic prospects were on the rise. This wasn't a spur-of-the-moment decision. It was a response to a pattern of growth and resilience that had been unfolding over time. These were the significant milestones that influenced the credit rating agency's decision. India's manufacturing sector has been a key player in this economic turnaround. The growth of this sector has been nothing short of impressive, primarily due to the government's supportive policies and the attraction of international investment. The Make in India initiative, launched in 2014, has played a pivotal role in this growth. The initiative aimed to transform India into a global manufacturing hub, promoting domestic as well as foreign investment. With a focus on 25 sectors, including automobiles, textiles, and pharmaceuticals, this initiative has been a game-changer for India's manufacturing landscape. Aided by policy reforms aimed at easing business regulations, the initiative has resulted in increased foreign direct investment. In the period from 2015 to 2020, India witnessed an uptick in foreign direct investment by nearly 60%. This surge speaks volumes about the confidence of international investors in India's manufacturing capabilities. Moreover, the government's push towards developing industrial corridors and smart cities has provided a robust infrastructure for the manufacturing sector to thrive. These strategically located industrial clusters have fostered innovation and enhanced productivity, making India an attractive destination for manufacturing. The government has also put in place a favorable taxation system with the introduction of the goods and services tax, simplifying the previously complex tax structure. This has provided further impetus to the manufacturing sector, making operations smoother and more efficient. All these factors combined have played a significant role in bolstering India's manufacturing sector. The sector's growth has not only resulted in job creation but also contributed to the country's GDP. The manufacturing sector's growth has been instrumental in enhancing India's economic outlook. Parallel to the manufacturing sector, India's IT sector has also been making waves globally. Over the past few decades, it has transformed from a small emerging market to a formidable player on the global stage. With a rich pool of talent and a favorable business environment, India has become a hotbed for tech innovation. The growth of the Indian IT sector is a story of continuous evolution. It started with IT services and outsourcing, then moved to software products, and now we're witnessing the rise of tech startups. Companies like Flipkart, Ola, and Paitam are not just Indian success stories. They have become global brands, demonstrating the potential of Indian entrepreneurship and innovation. Digital technologies have played a pivotal role in this growth story. The government's push for a digital India has led to increased adoption of digital technologies across various sectors. This digital push is not just about creating a connected society, it's about leveraging technology to drive economic growth and social change. One of the most impressive aspects of the IT sector's growth has been its impact on the economy. It's not just about the revenue it generates, but also the jobs it creates. The IT sector has been a significant job creator, providing employment to millions of people, thereby contributing to the country's socioeconomic development. India's IT exports have also seen a significant rise. The country is now one of the largest exporters of IT services in the world. This increase in IT exports has also led to a surge in foreign exchange earnings, contributing to the country's economic stability. The IT sector's emergence has solidified India's position as a global IT hub. Its growth story is a testament to the country's ability to adapt and innovate in a rapidly evolving global landscape. The sector is poised for greater growth and is set to play a crucial role in shaping India's future. While India has been on the rise, China's economic outlook has been downgraded. Let's delve into why this has happened. It's a complex interplay of several factors, and while China's economy remains formidable, there are some cracks beginning to show. One of the primary reasons for the downgrade is slowing growth. After decades of rapid expansion, the Chinese economy is beginning to decelerate. This is a natural economic trend, but it's been exacerbated by several other challenges. Among these is the demographic challenge. China's population is aging rapidly, and with the one-child policy in effect for over 3 decades, the country is facing a shrinking workforce. Unlike India, which is experiencing a demographic dividend, China's aging population could put a strain on its economy in the coming years. Then there are the trade tensions. The ongoing trade conflict with the United States has cast a shadow over China's economy. Tariffs, restrictions, and uncertainties have slowed down China's export-driven growth model. In contrast, India's diverse economy, which is less reliant on exports, has been more resilient to global trade fluctuations. Furthermore, China's debt levels have also raised eyebrows. The country's debt-to-GDP ratio has soared in recent years, raising concerns about the sustainability of its economic model. While India too has its share of debt, its debt-to-GDP ratio is significantly lower than China's. And lastly, let's not forget about the environmental costs. China's rapid industrialization has led to severe environmental degradation, and tackling this issue could further strain the economy. In contrast, India has been making strides in adopting sustainable practices, which could give it an edge in the long run. So while China's economy is still a global powerhouse, These challenges have led to a downgrade in its outlook. The downgrade in China's outlook is a reflection of the challenges it faces. It also highlights the contrast between India's and China's economic trajectories. As we move forward, it will be interesting to see how these two Asian giants navigate their unique economic landscapes. Today's discussion has shed some light on the fascinating dynamics of the global economy. We've delved into the critical role of credit rating agencies and their influence on perceptions of economic stability and growth potential. The recent upgrade of India's medium-term growth outlook by a major U.S. credit rating agency is a testament to its booming manufacturing sector and blossoming business environment. Meanwhile, the IT sector in India continues to make strides, contributing significantly to the country's economic rise. On the flip side, we've explored the factors leading to China's economic downgrade. As we have seen, not all growth trajectories are on an upward swing. The downgrade of China's economy by the same agency is a clear indication of the challenges it's currently facing. In the grand scheme of things, these shifts highlight the rapidly changing dynamics of the global economy. It's a world where nations rise and fall, boosted by innovation and hampered by challenges. We hope this gives you a better understanding of the factors that shape a country's economic outlook and the global economic landscape.